Hello distinction students, this is your tutor Miss Zulu. Welcome to today's comment session where we're going to look at banking. But before I get into that, remember to subscribe to my YouTube channel for more sessions. So we'll start by first defining what a bank is. So a bank is a financial institution which collects surplus funds from the general public, safeguards them and lends out at an interest. Some of the funds are not required immediately by the true owners to those in need of funds and can provide security. Okay, so the other way you can define a bank is a financial institution where you can deposit money, withdraw cash and manage your finances. Okay, so now we should also define what banking is. So banking refers to the activities and the services provided by the bank, where we can talk about depositing money, we can talk about withdrawing cash and managing the finances. Okay, so now let us go to the types of banks. Okay, so the first type of bank that we're going to look at is commercial bank. So when you talk about a commercial bank, these are the ones which probably you are all familiar with, right? So these ones, they offer services like saving accounts, we have checking accounts, and they also offer loans to individuals, so, and other businesses, right? So other examples of banks that I can give of, we have finance bank, I can talk of Standard Chartered Bank. Okay, so let's go to central banks. So a central bank is a bank which is responsible for managing a country's money supply and ensuring the stability of the financial system of that country. Okay, so I'll go to the third, which is pension funds institution. So when we talk about pension funds institution, these are institutions that manage to give retirement savings for individuals, okay, or rather save retirement savings for individuals. So an example that I would give of these pension funds, I would say NAPSA. In Zambia we have NAPSA. We also have WCFCB, which is Workers' Compensation Fund Control Board. Okay, so let us cross over to building societies. So a building society, these are financial institutions that provide banking and financial services similar to the banks. Okay, so these ones are similar to the banks. They also provide financial and other services, right? So let us cross over to discount houses. So when you talk about a discount house, these are financial institutions that are specialized in buying and selling of short-term government securities. Okay, so let us go over to the microfinance institution. When you talk about this microfinance institution, this is an institution that provides small loans, okay, and savings account as well as other services. All right, so this one can be given to an individual who wants a loan, or probably a small business owner who wants a loan. Okay, so an example I would give of such type in Zambia, I would give of Finca. Okay, let's cross over to foreign exchange bureaus. So when you talk about a foreign exchange bureau, it is also known as a currency exchange. Okay, so when you talk about this currency exchange, this is a financial institution where one can exchange currency for another. Okay, let's say for example you have dollar and you want to change it to kwacha, or you have kwacha and you want to change it to dollar. Okay, so let us look at the services offered by the bank. So one of the services that are offered by a bank, the financial traders by means of loans and overdrafts. So a bank can give overdrafts, and it can also give loans to people. Okay, so the other one that we'll talk about is they give advice to customers on business investments. So a bank is also responsible for giving customers advice on business investments. Okay, if you've noticed, nowadays in banks they also do that village banking. I don't know if you've heard of that, but one of the banks that I've heard of that village banking is Zanago. Okay, so I will also talk about they give trading information to traders on local and international markets. Okay, they receive payments on behalf of customers. They buy and sell shares at a stock exchange on behalf of customers. Okay, so they provide customers with night safety facility. What do I mean by this night safety facility? So this night safety facility enables customers to deposit money when banks are closed. So there are other business owners that go up to let's say overtime, okay, while the banks are closed, and they have like a huge sum of money, and that money is not safe to be with them at home, or maybe probably for them to move with it from where they are working from, where they're doing their business from, and take it home. Anything can happen. People can be robbed and everything. So that's why this night safety facility was introduced, where people can deposit, customers can deposit this money even when the banks are closed. Okay. They provide foreign exchange to the general public, especially those in foreign trade. Okay. So the other one is that they act as executors and trustees for the customers. Okay. They insure customers with credit. They issue customers with credit cards. They provide customers with automated teller machines, which is known as ATM. Okay. They provide customers with a safe custody of wills and other important documents. So let us continue discussing what the services of which the bank offers to the people or the customers, okay? So let us go in details about it. So the first one that we're going to look at is the ATM, okay? The automatic teller machines. So when you talk about this ATM, these are cash dispensing machines which operate 24/7 for customer to access cash from a machine at any time. Okay, so for customers to access this cash from the machine, they need to have a connected card, or which we call an ATM card, right? Commonly known as an ATM card. Way that banks operate or offer services to customers is standing order. A standing order is an instruction to the bank by its customer to pay a fixed amount of money at regular intervals to specified people or organizations. Okay, it is used when making regular payments of a fixed sum which must not be paid once but repeatedly over a period of time. Okay, so when we talk about this standing order, okay, we'll look at one of the advantages or some of the advantages that the standing order has. So let's go. Order a bank customer making payments, okay? So when we talk about order to a bank customer making payments, which is a debtor, okay? So we can say payments are made promptly, meaning a payment is not delayed, it's made quickly, okay? So the customers do not need to remember dates on which to make payments. It is safer and cheaper, okay? So we can also talk about advantages of a standing order to a bank customer receiving money, which is a creditor, okay? So the customer receives money promptly, okay, and can make a good business plan for his money. So meaning here also this customer will receive their money on time without any delays, and hence they can make a good business plan with their money, okay? So we continue with the advantages. He is saved troubles of sending reminders to debtors. So there's no need of you sending any reminders to your debtors, okay? No time is wasted in counting money and in depositing money at the bank. Okay, so we look at the other one, which is a way of which a bank offers services. We can also say credit transfer. So when you talk about this credit transfer, a credit transfer is used when making single payments or when making multiple payments to people or organizations with bank accounts at other branches or within the same branches at the same bank or other banks, okay? So how payment is made by this credit transfer? How do we make the payment using the same credit transfer? So the first thing that we'll do is a person making payments prepares a list of people to be paid with their bank's address, including amounts of which individual is to be paid indicated against their names. Secondly, the person that prepares a check or enough cash to meet the payment, once the check or the cash is deposited into the bank will transfer respectively amount to the credit side of each person's bank account. Okay, so that's what happens. The person receiving payment must have an account, but the person paying may not have an account. Okay, so let us look at the advantages of a credit transfer to bank customer making payments. So the first one is funds are transferred directly into the bank accounts of people to be paid using only one check. So you don't even have to stress about it because your money will be transferred directly. Okay. So the other one that we're going to look at is paper or clarity work is greatly minimized. Okay, it saves time when paying several people, so you don't have to waste your time. Like, it saves so much time on your side. Okay, it is safer and more secure method of making payments. Okay, so there's no need of having any complications because this is safe. Okay, no money is wanted for postage of cash or checks. So we continue with the advantages of credit transfer to customers that are receiving the payment. So the customer is able to receive payments promptly, meaning without any delay, they quickly receive their payments. Okay, time is not wasted in counting money. The other way which the bank saves services to the customers is direct debiting. So when you talk about this, direct debiting is used for making payments that vary in amounts, such as payments of subscriptions to professional bodies and clubs. Okay, so how this direct debiting operates is like this. In agreement with the buyer, the seller is authorized to ask for payments on dates he or she wants from the buyer's bank. Okay, the seller takes the initiative to inform the buyer's bank of the amount owed, which is then transferred to the seller's account immediately. Okay, so let us look at the advantages of this direct debit to the bank customer receiving the payment. So payments are received on dates wanted by the creditor. Okay, direct debit avoids outstanding debts and bad debts. So when you have this direct debit, you avoid owing money or having outstanding monies, a lot of monies. Okay, so payments are received promptly, meaning without delay, you quickly receive your payments. Direct debit is safer and more secure method of payment as well. So time is not wasted in counting cash notes or in depositing money at the bank. The creditor can ask for payment from the debtor's bank at any time payment is due. Okay, so let us look at the advantages of direct debit to the bank customer making payments. So they enable payments that vary in amounts to be paid from time to time. Okay, so there is no need to change or to have the records whenever there is an increase or decrease in the amount to be paid. Okay, so the customer does not need to remember the dates on which the payments should be made because every record is kept by the bank. So there's no need for you to keep. But for security purposes, yes, you can keep your own tracks. But initially, the bank will have all the records on the dates which the money is supposed to be paid or on the date which the money is supposed to be received. Payments are made promptly, meaning without delay, they are made on time. Checks do not have to be written. Okay, so let us look at banks may act as executors and trustee for will. Alright, so when you talk about executors, what do we mean? So an executor is a person appointed to carry out the terms of a will on behalf of a deceased person. So this executor is a person who stands in or who represents or who is appointed to carry out the terms on behalf of maybe somebody who's died. Okay, then we talk about a trustee is a person appointed to look into the affairs of a person still alive. So that's the different executor, somebody appointed to carry out terms on behalf of a person who's died. While when we talk about a trustee, a person who's appointed to look into somebody's affairs, somebody who is still alive. So let us look at the other way, which is the credit card. So how the bank offers services to the customers using credit cards. So when you talk about these credit cards, they enable holders to buy goods and services without having to pay cash for them at the time of purchase. So most of the times we work in certain supermarkets and other shops where even if you don't have cash, right, you just use your credit card to swipe or something like that. Even fuel now, when buying fuel, you can just use a card, you can just swipe and get your goods. So it's not all the time that you have cash, so you can just use this credit card, and that's how we are helped by this card. Okay, so thank you for watching.